stocks I'm buying October 2019 edition. Welcome in, guys, to my favorite series I do on this channel each and every month. Oh my gosh, I've been waiting for days to do that powerful intro, and I finally have my voice back. We're going to get into 3 stocks I'm planning on buying in the upcoming month. Upcoming month being October 2019. I'm going to talk about what I like about these stocks. Also going to talk about some pitfalls with some of these stocks as well. I know some people like to hear about the negatives with some of these stocks as well as not just the positives. So talk a little bit about risk reward with these 3 particular stocks. I want to hear from you guys in that comment section on what stocks you're planning on buying in the month of October, as well as what you think of these 3 particular stocks I'm going to be sharing with you here. I would love to hear your guys' opinion. As always, today's video is sponsored by this guy's channel, Financial Education 2. He's an up-and-coming YouTuber, and he gave me $15,000 in cash money to give him this shout out here. He's got nearly 31,000 subscribers, and would you like to check out some videos like how to become a millionaire, dividend investing versus index fund investing? Or what about a video like Elon Musk leaked email to Tesla employees? Ooh, that seems interesting. What about this one? Should you buy stocks during a recession? Anyways, whether you subscribe to his channel or not, I already got paid, so I don't care. Alrighty guys, coming in as the first stock is good old Oobity Booba. It's a brand new stock I just started buying very recently, as in the past week, and I plan to build this stock into a very big position over time. This isn't going to be the only time I buy Uber stock. I'm going to add this position for months to go in the future, if not a year plus in the future. I want to build this into a really big position. The stock is about $29 a share as of recording this video here today. Market cap on this one's about 49-50 billion, somewhere in that range. So a pretty big company, needless to say. I mean, when you're talking about around a $50 billion market cap, you're talking about, a bigger company in the public space, all right? So we're going to talk about some of the bullish points here, and then we'll get into some of the bearish points or some of the negatives around the stock, because as with all stocks, there's always risk and reward involved with the stock, okay? So first off, they're the worldwide leader in ride sharing, which is a massive market that has exploded over time. If you think back 10 years ago or 20 years ago, if you wanted to get a ride somewhere, you needed to call up a taxi service, and it was very inefficient. A lot of times the rates could be really high and things like that because of regulation. So needless to say, it was an industry that was due for mass disruption. Uber came in the space, completely changed it. There's a lot of competition in all different markets. If you live in the United States, obviously you know of Lyft. That's the main competitor in the United States, at least. But in each market, it's different. They have different competitors in each market. In Asia, they got different competitors. In Latin America, they have different competitors. So in each market around the world, Uber has competitors. They're just different competitors. But if you look at who's the #1 player in ride sharing at the end of the day, it is Uber, okay? Now, the ride sharing market, from everything I've studied about this market and looking at the trends and looking at the pressures on these different companies to kind of be profitable over time, I can definitely see the ride sharing business being profitable as early as 2021, okay? Keep in mind, we're coming up on the end of 2019 right now, okay? So it's not that far into the future. I believe the rideshare market will be profitable for Uber by 2021, which is really a game changer, because then it will take Uber from a situation where it's always been a company losing a lot of money to maybe it's either breaking even or actually making a profit on the bottom line, which will definitely be something that a lot of investors will love to see, okay? But the ride sharing market's got a lot of pressures on it, because here's why it has a lot of pressures, okay? If you look at something like the United States market, who's the #1 other competitor in the United States market? It's Lyft, okay? Uber and Lyft dominate this market, right? Lyft is in a position where their stock's being hammered right now. There's going to be a lot of pressure on that company to get that company to profitability. How do you get the company to profitability? You raise prices, okay? When you raise prices, who else can raise prices? Uber raises prices, okay? And it doesn't take a dramatic difference in how much a ride costs to make these companies profitable. It's not like these companies are losing $5 a ride or something like that. They're losing a very small amount of money. Sometimes it could be 10 cents a ride. Sometimes it could be as much as 50 cents a ride. It all depends on the rides. It all depends on the markets. And I can almost guarantee you Uber probably has some markets that are actually profitable right now, but there are definitely some markets that hurt the business overall. But the business overall will be profitable, in my opinion, by 2021. Just looking at the trends, you have and also a lot of VC money is drying up right now, and when that money dries up, it puts pressure on all the other companies around the world competing to, hey, you guys need to get this business profitable. You need to up your rates. Forget the market share battle. The only reason these companies haven't been profitable yet is strictly for the fact that they've been trying to compete over market share, and it's been a cutthroat battle, and they're trying to get this another 1% of market share, and this guy's trying to get 2% of market share, and all those sorts of things. That's about to change really soon here, okay? And that's when that business gets very profitable, all right? Also, they have a 15% ownership in Didi, which is one of the other biggest players in the entire world, especially the biggest player in China when it comes to ride sharing. That stake in itself has been rumored at being worth somewhere between $5 and $10 billion. And as Didi, continues to expand and get their business model in a better and better place, that valuation should be worth more and more. So it's nice that you're the biggest player in the world in ride sharing, and then one of the other biggest players, you have a pretty good chunk of ownership in that company, okay? Also, Uber is backed by SoftBank. SoftBank has almost unlimited funding. They started a vision fund very recently, got like $100 billion, literally $100 billion at the disposal. So which means if Uber needs money for whatever reason, SoftBank can always invest more money into Uber, okay? And also, Uber is very flush with cash right now because they had that IPO and they raised billions and billions of dollars from the IPO, okay? So that is all good news. And by the way, SoftBank just had to take a big write-down on WeWork, which gives even more incentive for Uber to work overall. And another big reason, because Uber is one of their biggest, if not their biggest investment, SoftBank's. So Uber absolutely has to be, a grand slam for SoftBank overall if they want to raise a lot more money in the future after taking something embarrassing happening like the WeWork situation, having to take a big write-down like that, okay? So that is all good news there. Now, also, they have other parts of their business outside of ride sharing. Uber Eats, the number 1 or number 2 player in most markets around the world. We know food delivery is something that's becoming bigger and bigger, where you just go on your phone, you're like, I want this kind of food, boom, 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 and it comes and gets delivered to your apartment or your house or condo or whatever. The number 1 or number 2 player in almost every market you would possibly want to be one of the biggest players in. They also have a business that they acquired a few years ago called Jump, and this is a bikes and scooter business. So if you live in a major metropolitan area like a San Francisco, New York City, Boston, somewhere that's a big city, right? And then you can think about all the huge cities around the world. If you live in those cities, there's a good chance you'll see some bikes and scooters all around. Some people complain about it, right? In downtown areas. And it's basically just people just like get on an app, boom, and they can ride that scooter wherever they need to, or the bike or whatever. And they're usually electric. And this is a business that hasn't, made them any money as of yet. But over time, I could definitely see this as people, begin to start to use these things on a regular basis. I could definitely see this as something that has big potential down the road for that. Like, if you want to go a half mile and you don't want to walk or you can't walk, you need to get there faster or something like that. This is definitely, something that could work for you rather than trying to wait for an Uber ride, which may take 3 minutes to get to you or 5 minutes to get to you or something like that. You just, hey, there's a scooter right there. Boom, let's get on it. Let's go. Okay. So that has good potential there. And then Uber Freight's really a game changer. This is the product that Uber has that no one's really seeing right now. And this product, basically, it's kind of the middleman for hooking up like delivery drivers of, big trucks with folks that need to ship products. Okay. So they're kind of like the middleman app there. If you're a shipper and you need, all this stuff shipped, to wherever you need it shipped to, you go ahead, you can go on the Uber Freight app, you put it in, then a trucker can see what the terms are. Oh, I get $800 for delivering it from this state to this state over here. Okay, let me accept that shipment. Let me drive over there. So this is really a game-changing product because they're a middleman and they're charging way less. I've seen a lot of the fees. It's like 1% a lot of times Uber charges for that being that middleman on Uber Freight versus traditionally with a lot of these companies, it would be 10 to 20%. So if you were a trucker and you needed to get another ride, whoever's the middleman playing there, a lot of times they could take 10 to 20% of whatever the shipper was paying. So a massive difference in cost and the big cost advantage and tech advantage versus the traditional model. Another industry that Uber is going after that, it was just ripe for disruption. No one was going after it, and Uber said, we're going to go after it. And I love that about Uber. They just have like that innovation in their core, and they're ready to, disrupt industries that, need disruption. Not many companies can really do it like Uber's doing it, all right? So that's why I'm very, very bullish on Uber. I believe this is going to be a massive, like when I say massive, I mean one of the biggest tech companies in the world within 5 to 10 years, okay? It's going to take a while to get there. They got to get profitable, and then the mass profitability will start to come through as the ride-sharing market continues to increase in profitability, and Uber Eats will eventually turn profitable. That's further down the road, in my opinion, to getting into profitability. profitability than the ride sharing market, so we are going to have to wait on that. And then Uber Freight should be an absolute game changer. That's like, the Amazon Web Services that no one's seeing right now, and that just has huge potential. So very, very bullish on Uber. That's why I want to build this into a huge position in the future. I think we're going to do great on it. Let's talk about negatives with this stock, all right? Currently an unprofitable company, as we all know, and as we talked about, I believe that will change over time, but as of right now, at least, it has always been an unprofitable company, and it will be for at least the next year or 2 years, or maybe even 3 years into the future, okay? It's a big tech company, so when you're talking about big tech companies, an Uber or Facebook or Apple or Google or any of these big tech companies, right? You just get involved with a lot of drama and regulation and politicians saying, hey, this is bad or this is good, and it's just like you have to get, it's just the way it is. When you grow up and you become this big, huge thing that Uber's become now, you just get involved in a lot of different things, and that's something you have to deal with owning the stock, about regulation and things like that, okay? Competition has a lot of cash as well. Uber is kind of winning the cash game as far as they're the most flush, but in all the markets, whether we're talking ride sharing market, Uber Eats, their competitors, they got a lot of VC funding money as well, which is what's still kind of hurting their profitability, because if these companies didn't have all this cash and didn't have all this VC funding, if these companies didn't have that, guys, this would probably already be profitable business models. But when you're talking about, everybody's trying to fight for market share and they have all this cash, it puts a company in Uber like, we're not going to lose market share, so we got to drop prices as well, okay? So competition has cash, and so it's going to continue to be a competitive market, whether we're talking about Eats business or ride sharing in general. And lastly, if we think about the autonomous taxi network, which is further down the road, there's a decent chance that one of my other stocks could actually beat them to the autonomous taxi network. And if they do, that company could actually maybe potentially be the #1 player long term in autonomous taxi network, because they could just be like, if it gets into people's mind first, kind of like Uber. If you're thinking about like you need to get a ride somewhere right now, right? The first place you're going, generally speaking, is Uber. If this company, one of my other companies, beats them to that market, then they could potentially be the #1 player. Who is that company? It is Tesla, okay? Tesla has an opportunity with what they're doing in self-driving and the fact that they can build their own vehicles. They have an opportunity potentially be the first real player in autonomous taxi networks, which, if that ends up happening, that could mean Uber long-term could be the #2 fiddle. I believe Uber and Tesla have the best opportunity to succeed when it comes to self-driving vehicles and autonomous taxi networks, but that is a little further down the road, but there is definitely a risk that my other stock could beat them to that, which puts these guys as maybe being potentially the #2 player there, okay? So I hope that I covered kind of the risk with this stock, as well as, why I'm bullish on the stock overall. That's the first one of the bunch, Uber stock. Let's get into number 2. Coming into stock number 2 is also a stock I just started buying recently for the month of October, and that would be iRobot, ticker symbol IRBT on this one. About a $59 stock as of today, about a $1.7 billion market cap on this one, okay? Pretty excited about this position, definitely a position I plan on adding. This is a stock that has been hit heavily. I think it was $120 something less than a year ago, if you go back and look at the stock chart of this one, and it's fallen so low, I'm like, I've got to start buying this stock. I've owned this stock in the past. I made good money on it. I had sold it, and I hadn't been involved with it for many years, but I always track stocks that I sell, and this is definitely one of those, okay? They're the #1 player and the #1 brand name in robot vacuum cleaners around the world, which if I'm looking out and I'm trying to think about like 5 to 10 years from now, it's hard for me to imagine, people that don't have robot vacuum cleaners in their homes to basically take care of all the floor cleaning. I mean, it's still pretty common for people to like have a stand-up like vacuum cleaner they push around their house. If I look out into the future over the next 5 to 10 years, I think it's going to be very commonplace to have a robot vacuum cleaner, where if you go back just a few years ago, if you had a robot vacuum cleaner, it was like, whoa, is that one of those Roomba things that like goes around and vacuums your house? It's becoming a little less of a super cool thing now and more of a normal thing. And even if you go to a lot of Target stores, they have many different brands of robot vacuum cleaners, and it's much more a normal thing now. And if I'm thinking out 5 to 10 years from now, I think it's just going to be like, if you go to buy a vacuum, you're going to buy a robot iRobot vacuum cleaner in 5 to 10 years from now, okay? You're not buying like a stand-up one. That's gonna be like, oh, that was so old school, okay? So number one brand name, they're number one biggest player. You know I love to be the number one or number two biggest players in different markets, and they're definitely there, okay? So for that reason, they'll always be able to get a premium price versus their competitors because they're the most known brand and the most trusted brand for robot vacuum cleaners. So if you're going, let's picture you're going to like Target or Walmart or you're going on Amazon and you're looking up robot vacuum cleaners and you see this one here, it's priced at, you know, $220, and there's an iRobot one there for $250, and you're looking at these and you're like, maybe I'll save $30, but one's like a Chinese brand or some other brand that, like, you know, isn't known for like robot vacuum cleaners. You might say, well, I'm spending $200 and there's $250. Let me just go ahead and buy the iRobot, even if it's a little more expensive than the other, because I trust the brand more, okay? And that's the big advantage of being a number one brand player. That's why everybody buys, like, you know, why does everybody buy certain things? Why does everybody go buy a Coca-Cola or a Pepsi? You know, the other products are very, very similar, but Coke and Pepsi have the brand name, and if you go on the shelf there, you're gonna buy a Coke and Pepsi if you want a cola product, okay? Why does most people, at least in the United States of America, buy Apple phones or Samsung phones? They trust those different companies, and that's just the way it is for different products in the market. So that you're always able to charge like a premium price versus your competitors, and even if the competitors undercut you for price, a lot of times still people trade up for it. And also they have a lot of different price brackets, okay? You can get a Roomba vacuum cleaner on sale for something like $200 or around $200 if you get it for a good deal. You can go all the way up to over $1,000. They have, you know, different Roombas on their website that cost over $1,000. So price brackets, they're pretty attractive to most consumers out there, or at least the average consumer that's like middle class and up. You know, you can afford one of those products, and then some folks like to spend a lot of money on these different Roombas, okay? It is a profitable company. Forward P of about 19 on this company. You know, I mostly love profitable companies. Most of the companies I own are profitable, except Uber and Tesla. I think those are the only two companies I own that actually don't make money as of right now. But in iRobot's case, definitely a profitable business and has been for many, many years. Expanding revenues, if you look at their revenue chart over the last, you know, 2-3 years, highly growth name in the appliance space, which, you know, if you're talking about vacuum cleaners, is kind of like almost an appliance, and there's very few companies that have had, you know, super nice double-digit growth like iRobot has over the last several years. I expect them to continue to expand revenues for many, many years in the future. They have expanding product lines, so it's not just Roomba vacuum cleaners. They also have a floor mopping product now in the market. They have a lawnmower product coming in the future, okay? I mean, we don't have a lot of lawns out here in Vegas, needless to say, but, you know, in different parts of the United States or just around the world in general, it's pretty common to have a lawn, either in your front yard or backyard or both, and that's definitely an interesting product for that market. Those are definitely going to be a little more niche. When we're talking about floor mopping products, when we're talking about lawn mowing, those are more niche, but, you know, expansion opportunities for the company. Also has a good CEO, Colin Angle. I like that guy. He's always had a relationship with Jeff Bezos and kind of like an Amazon relationship there. Amazon's, you know, it's kind of interesting when you think about this. Amazon's trying to get more and more into robotics, and they're also trying to get more and more into your home, right? And here you are, you got a robotic company here that is all in people's homes and is mapping out people's homes. Like the high-end robot vacuum cleaners now, they can actually map your home, and they know this is a living room. They know this is a kitchen. Very, very interesting, and some of them can even, you know, interact now with something like Amazon Alexa. Might be an interesting acquisition target for Amazon, especially with the relationship with the CEO of iRobot, who knows Jeff Bezos personally, from my understanding. Might be an interesting acquisition for Amazon. Who knows if that'll happen? That's not one of my bullish points on why I'm in this stock and why I plan to continue to buy the stock, but it does make sense. And for, you know, it's $1.7 billion market cap, so Amazon could even pay $3 billion for this company, which would be a nice premium. And it would still be like nothing. It'd be like nothing. It'd be like nothing for Amazon to spend $3 billion on this company. So very, very interesting when you kind of, you know, put the pieces together there. Who knows what will happen though. Tariffs. So if we're talking about the negatives in regards to stock, tariffs are hurting the company right now as far as profitability goes. Most of their Roombas are made in China. 25% tariffs are hit on those right now. That hurts a lot of your profitability. When we're talking about a 25% tariff iRobot has to pay, it's substantial, and it definitely hurts profitability in a major way. If that was to get cleaned up, the profitability almost explodes overnight. So definitely something to be bullish about, but it's bearish here in the short term, okay? Another thing is that basically they need to get under the $200 price bracket if you're really going to get the masses to afford this. Keep in mind, most people are used to paying less than $200 for a vacuum cleaner, and some are used to paying less than $100 for a vacuum cleaner. And so if you're talking about Roombas usually start around $200 and up, then that's a situation where maybe like middle class and up can afford those, but kind of like the lower middle class, and if you go under that, they can't really afford to spend $200 something or $300 on a robotic vacuum cleaner. So if iRobot really wants to get the masses around the world to be able to adopt their products, they really have to get under $200 for their products and be able to do so in a profitable manner. So that's kind of like the holy grail there. They might be able to do that over time. We'll have to see what happens there, okay? And the other kind of negative is obviously pretty much every company that has stand-up vacuum cleaners are now in this space, and they are now competing directly with iRobot because they've just seen the whole industry explode as far as robotic vacuum cleaners go. And a lot of these guys that have businesses where you're pushing around a stand-up vacuum cleaner, they're starting to think, and they're like, I don't know if anybody's going to buy those in 5, 6, 7 years down the road. So we need to have robotic vacuum cleaners. So there's a lot of competition in the space, okay, and will continue to be for a year into the future, okay. But overall, that's why I'm bullish on iRobot stock, and that's kind of, if we're thinking about the risks involved with iRobot, that's kind of the risk involved with this stock. So I look to continue to build that position, especially if it goes lower. If this was to go in the 40s, that's when I would really start loading up heavily on it. But even in the 50s, I've started buying now, all right? Let's get into stock number 3. Alrighty guys, coming in at stock number 3, this one I am super excited about over the next 3 to 4 years. I think this one has some unbelievable potential as far as the stock price goes over the next 3 to 4 years, and I've been buying the stock for probably at least about a year now, and I'm going to buy a little more shares this month, more than likely. It is Skyworks Solutions, ticker symbol SWKS. Some of the other companies I mentioned, iRobot and Uber, those might be more like household names. You might have never heard of this company in your life, Skyworks Solutions, okay? It's about a $13 billion market cap, so it's no small company. About a $77 share price as of right now. And this is a semiconductor company, and if you look at like the teardowns of like iPhones or like, Samsung phones and whatnot, I'll probably show you the iPhone 11 Pro Max teardown right now. You're going to see there's not just a lot of different semiconductors in that phone in general, there's a lot of Skyworks Solutions specific chips in those phones, okay? And if you're an electronics company of any kind and you sell any type of hardware related products, good chance you use Skyworks Solutions for some of your connectivity chips, okay? So they're a huge player in the electronics industry in relation to building semiconductors for these different products, all right? Now, 5G is a huge content expansion opportunity for the company. There's so much more content that can be gained because of how complex these different devices are going to be once we get into 5G, that this is actually a really big opportunity for Skyworks Solutions, and they have a chance to be one of the bigger players when it comes to 5G. And so this gives the company a, really a big game changer solution out there. And if we think about 5G, this is something that's starting to get rolled out right now. It's just starting, as far as like the infrastructure started getting built like a year or two ago, and it's going to continue to get built over several years. This is hard to do. The infrastructure for 5G is not easy because everything has to be so close together. So needless to say, it just is starting. Like Samsung just came out with a 5G phone. It's very expensive, but they do have a 5G phone in the market. And basically, over the course of the next 12 months, pretty much every single company that makes a smartphone and a lot of companies that make electronics devices in general will have 5G products in the market, all right? So 2021 through 2023, it's going to get really fun for any of the players that are playing in 5G, because that is when mass adoption of 5G products is going to take off like insane. Like, 2021 to 2023, everybody's going to be getting 5G phones of some kind, 5G watches, everything across the board. It's going to be 5G. So it's going to be absolute craziness, and that is a massive opportunity for Skyworks Solutions to hopefully capitalize, all right? Now, this company always has a great balance sheet. Generally, they always have about $1 billion in cash and investments on the balance sheet, sometimes even more than that, and usually zero debt, okay? So great balance sheet, 4P of 12. In my opinion, that's way too low. When you think about like how big their opportunity is to expand the business in 5G, 4P of 12, way undervalued in my personal opinion, way undervalued, okay? Once again, they produce needs-based chips. These aren't just like chips that, you know, it's like, oh, we don't even need those. No, you need these chips if you're making smartphones or electronics in general. You need the chips that Skyworks Solutions making, okay? And in most of the market segments that they compete in, they have like one or two major competitors with a lot of these products. So it's not like, it's just like somebody can come out of nowhere and just start like a semiconductor company overnight or something and like they're competing with Skyworks Solutions. No, it doesn't work like that. You know, the chips they make, these take tens of millions, hundreds of millions, or even billions of dollars of investment for years and years in research and development to get to these type of levels where the chips are at. So it's unbelievable scale, and then the logistics of getting mass amounts of chips made and sent to the customers, Apple, Samsung, all these different customers in a timely fashion. You know, it's a pretty unbelievable operation. So it's not like there's a million competitors. There's one or two major competitors, generally speaking, in most market segments they compete, okay? Now, if we're talking about the bad things with Skyworks Solutions, it's usually just a bunch of short-term stuff that's going on in the market right now, okay? Smartphone sales at the moment are weak. Like, smartphone sales are not growing. A lot of markets is actually decreasing right now. There's not a lot of excitement around smartphones, although I will say iPhone 11 is supposed to be a dud, and it looks like sales could actually be a little stronger than expected for iPhone 11, at least is what we're looking into in as far as initial reads and whatnot. So we'll have to see what happens with that. But needless to say, smartphone sales around the globe, it was a massive growing category, and you know, over the last 2 or 3 years, it's really come to a standstill. Very, very slow growth there. So that's obviously not a good thing for Skyworks Solutions here in the short term. That should pick back up in 5G, but right now it's hurting them. The China-US trade drama, obviously that's not a good situation. That is something that's hurting the business right now. Huawei was a 10 to 15% customer for Skyworks Solutions, and that customer is kind of gone right now. There's like, you know, can you do business with Huawei or not? There's still a lot up in the air there, but Skyworks Solutions most quarters will get 10 to 15% of their business from Huawei, and overnight, in a snap of fingers, it went to zero. So that is something that also that's hurting the business here in the short term. And then dividend yield 2.2%. Some people say, yeah, that's like nothing for a dividend stock, a dividend paying company. The way I look at it, I'm not even owning Skyworks Solutions strictly for dividends. This is just a plus. The fact that I get to get 2.2% on my money based upon, you know, current stock price and what the dividend yield is, like I'll take 2.2%. Like I love that. Okay, I'll make, you know, based upon what I have invested in Skyworks, I'll make thousands and thousands of dollars this year just from the dividend payments Skyworks pays me out, and I can go ahead and, you know, reinvest that money in other stocks or buy more Skyworks Solutions. So, you know, some people say, oh, it's only a 2.2% yield. Man, I'll take that dividend. They also have a big stock buyback on right now, taking shares off the market. That should help, you know, obviously the EPS over time. So I really like Skyworks Solutions. You know, I want to buy a little more shares before 5G starts to really take off like crazy. Let me know your opinion on any of these 3 stocks. Discuss in that comment section. As always, don't forget to smash that thumbs up button. Thank you for watching and have a great day.